I don't know if anyone is here. Hey, Chris. You can hear me? Awesome. Hey, Doll, B12. Getting a few people getting over here. It's weird. It's popping up saying that the room is full, but people's trying to get in. I don't know how it could be full. Got some folks trying to join. Hey, Jim. Alton, hello. Hey, Caesar. Good morning. Good morning. Well, we have a little technical issue with our pro trading room. And so what I've done is move over here. Whoops. Can you guys see anything? For some reason, I think I lost screen. Give me just a second. There we go. I think we got the screen back. I'm not very familiar with this system, so please forgive me. Not at all familiar with this system. We're going to try and make it work. And I'm going to try just really quickly. I logged off and I'm going to try to log back into the pro trading room. Sometimes it lets me in, sometimes it won't. We'll see if that'll eventually get. Yeah, right now it's not even letting me back in. Kind of got a mess going on here this morning. So I can't even see what you guys are saying over there in the room, or if anyone is trying to get in. So I apologize, guys. For those who might be showing up here that have never been to Right Way Options, we'll chat here this morning. You're welcome to ask questions. Thank you, Ed. Yeah, no kidding, Bob. Stuff happens, right? Stuff happens. So, for everyone that is listening and never heard of Right Way Options or anything like that, please forgive me because I'm not very familiar with this system. Because our pro trading room is running into some problems, I thought I would go live over here. We had a really good end of the week last week, made some really big money. Haven't made any trades today except, while I was waiting for Pro Trading Room to come up, I made a trade in futures, picked up some money, but not much else to talk about here this morning. We were discussing the issues with the banks here earlier. Obviously, FRC now down 77.96%. Wall, Western Alliance down 82.5%, continuing to show those major issues, major concerns in the banking industry. If we take a look at the financial ETF, this is something we were short last week, gapping substantially lower here into some support. Obviously, the worry out there is, will this contagion continue to spread, and will the Fed be able to stop the bleeding here? It is entirely possible, guys, that we could seek some continued selling. So be really, really, really careful with this whole idea of just rushing in to buy the dip, that the Fed's going to back everything. I don't know that they will, and I don't know that they can, honestly. So we'll have to watch this pretty closely. Now, on the technical patterns here, just a second, I need to get drawing tools going here. One of the things that we will have to concern ourselves with is these resistance levels above, even if we do get a rally going. So, as we rally up, sorry, I'm getting a Camtasia running here again. I'm going to turn on this recorder so I can, and pause it so I can have some drawing tools. So what we need to concern ourselves with is these resistance levels above. This is a level that I marked on Friday and said if we broke through this support, look for this level to be tested. Well, we've now done that in a pretty big way, and we'll have to see what that means if we can rally back up here toward these resistance levels in the chart and the potential downtrend. Now, if the Fed can backstop enough, there's no reason to believe that we can't move back up there, but obviously there is a concern here in the market. Our SPY, I mentioned on Friday to look for a test of this support if we failed here. And well, we failed and pushed on through, and now we run that real risk that we could test the bottom side of that support here in SPY. And unfortunately, what we're starting to see is we're really starting to see some damage in some of the technicals here in the charts. We're backstage and have to add me. Since I'm not familiar with this, Jim, I don't even know how to do that. Yeah, I don't even know how to do that. Honestly, I think what it's trying to do, guys, is for some reason that link is, if I click some of these buttons, I think what it's going to do is share your screens. I don't know why it's doing that, but I think that's the case. So if you guys can see my screen here live on YouTube, you can also just go to YouTube, just go to the right way options. messages aren't coming up, but I'm seeing them in a private chat for some reason, Jim. Ed is saying that there is a correct link in the pro trading room. If you guys would go, if you'd log out that aren't able to see screen, if you would log off and then log back in using this new link, maybe that would fix the problem. If you guys wouldn't mind doing that, I'd appreciate it. Maybe that'll solve the problem. So, again, I'm not familiar with this system, so I do apologize for this. Awesome, Nathan, you made it. Hey, Jim. So, Doll, if you would log off that link that I sent and log into the link that Ed posted, I would appreciate it. Hey, Bob, good morning. RZ, going to ask you to do the same. Vern T, if you could do the same. Then log back in. Hey, George. All right. So normally what we do, I know we've got folks here that aren't normally in the Right Way Options Trading Room. We do a 2-hour session every single day where you guys can ask me questions. Hey, Sully, how you doing? You guys can ask me questions. You can ask me, about positions. We'll lay out positions. We'll talk about different things. I will tell you that I think today is a very dangerous day to trade. We will have to remember that um, we have big economic data coming up here over the next several days. If you'll notice here, that's weird. You guys can't see that. Okay, well, you can't see it. You can't see it. But we've got CPI tomorrow. That's going to be a potentially market moving number, particularly if that number were to come in as hot or hotter than last time. If it comes in less than expected, then that would be about the best scenario for the bulls. If it comes in hot or a little bit hotter than expected, then um, that could create some issues here for the Fed. And if that were it, we'd be in pretty good shape. But then we've got PPI on Wednesday. We've got retail sales, Empire State Manufacturing, business inventories, housing market index. We're going to have housing starts and permits, and then jobless claims, and then the Philly Fed on Thursday. Industrial production comes in on Friday. So we have a full meal deal of data points that could move us around substantially. So just going to have to be really, really careful in this market. Um, It might be a week for popcorn. That's right, Bob. That's right. One of the things that I said, sometimes you just need to put your feet up and pop some popcorn and watch the show, protecting your capital. So that's kind of the situation we have going here at the moment. Um, so let's talk just a little bit about some of the charts that I think could be of interest. First, if you start looking at some of the inverse ETFs could be setting up here. As you can see, we could, you guys can't even see my drawing tools. Dadgummit. Hold on just a second. Let me try something else. No, I don't think I can, actually. I think I can. So we'll just do this. PSQ, as you can see, rallying here um, in this little upside trend. And now, as we pull back, if we can find some support in here someplace, this is an inverse ETF. It's a one buy inverse ETF that might be interesting to pay attention to. We're going to see, um, RWM. This thing just shot up huge, pushing some resistance here in the chart. As you can see, a rest or pullback in here could set up a bullish opportunity. Um, DOG shot up big time strong. Any rest or pullback to hold a support in here, I think sets up an opportunity. You can see we've got a little upside trend going on. So any rest in there could set up that opportunity. And then, of course, SH for the SPY doing the same thing where we rallied into price resistance, into that support level in our index charts, and then any rest or pullback in here could set up alongside opportunity. We're certainly seeing precious metals. Folks are working or racing to get to some kind of safety here. And we've got gold futures up right now, $50.20 an ounce. And you can see they've been shooting up here the last few days as everyone's looking for some way to get to some safety. And then, of course, we're seeing like precious metals shooting up as well in silver. We're seeing copper trying to bounce back here a little bit. So those things are kind of interest here this morning. We've got energy that gapped substantially lower here this morning. And that is going to be an interesting thing to see, because if the market is weakening, we could begin to really develop some major issues with our bonds. Um, um, and the demand destruction in the economy. So, oil right now has bounced off of lows. Oil was down over $3 a barrel this morning. It's right now at 75.64 a barrel, just down $1.04. Brent is down only 97 cents at the moment, and natural gas is up. This I think is a potential for a nice longer term hold. Could also be a little swing trade in here if you just want a quick in and out position. Might find something there in UNG. As you can see, we're trying to put in some higher lows, trying to hold a little bit of support in here on natural gas. You might also find something interesting in Boyle here, kind of doing the same thing. A little higher low, little hold of support. Still got to get through some of these downtrends here and resistance levels, but natural gas might be coming back around. Chris, a QQQ bear call spread. Let's see. Let's look at, and since I can't seem to share other windows, well, maybe I can. Just a second. I'm still trying to learn this system. But if we look at a 305, and a 300. So you're going to be um, I would tell you right now, Chris, that's not a trade I would want. Um, Not yet, because I want to short near price resistance. If you guys um, remember, we had our short trades on when we were pressing the resistance levels in the chart. When we're near support, I don't want to put on a short position. I would rather this rally back up a little bit, rally into some resistance areas, and then put on the short position. Besides that, I could get a better premium if I did. Let me see if I can. Whoops, that's not working. Hold on. I thought maybe I could share my TC2000, but I can't seem to do that. So that we could look at those prices. But I'm guessing those prices aren't going to reach the threshold level, at least for me, in a credit spread. My threshold on a $5 wide spread is $1.65 credit, and I'm guessing that's nowhere near that at the moment. Um, I can take a quick look here, but you can't see it. Let's see. April. April 300,305. Second. Well, that's not right. I was speaking way out of turn. The April 300,305 works great. It's a at $1.76. Um, so credit wise, that definitely works, Chris. Um, the thing is, it's got to be because of the implied volatility move. With it being up here, you're really risking this rallying up toward that area and being down on that trade pretty quickly for the bull put credit spread. Um, or excuse me, bear call credit spread. I think I would be more comfortable, honestly, with doing a bear call, maybe underneath this price support. Excuse me, a bull put underneath this price support in here to try and catch that bounce up um, in the market rather than the bear call. James, I really agree. What we're seeing here in these banks right now, it's a pretty brutal situation in some of these banks, and I think this contagion really has the potential of spreading, and it really is going to depend on how much the Fed is going to be willing to do or will be able to do. If we were to see inflation continue to rise in this situation, the Fed is really they're stuck between a rock and a hard place. That's going to be a real problem for them, I think, overall. So, um, yeah, we'll have to be really, really careful here. Travelers, big sell off here in Travelers, as you can see, pushing down. I think any rally backup in here would set up the next shorting opportunity for travelers, breaking lower. Now, GE is one of the strong ones of the bunch. If you're looking for a long trade, GE may be pulling back to some price support in here in the chart, and it may need a little bit of time and rest once it pulls back to come back into this trend, rest into here, but might be worth keeping an eye on GE. The casinos that were looking so good, they're pulling back to these support levels and may run the risk of breaking them here if this situation continues to worsen. So keep an eye on Wing Casino. Roku is one that I was watching for a potential buy. As you can see here in Roku, now we broke this support. So the only way this can be bullish to me is we have to cross back above that support and prove to hold it um, in that chart. So second here. As I'm going along, I'm trying to learn all of this stuff, and I can't. There doesn't seem to be any tool that allows me to draw directly to this screen I'm sharing. So apologize about that. A little worried about Schwab. Schwab was selling off awfully hard here this morning. Yeah, it looks like it's pretty rough. Schwab, I'm pretty sure, is going to be just fine. I mean, they also own TD Ameritrade now, the integration there. But what we may be witnessing here, Bob, is a little bit of everybody's bailing to protect themselves. I think they'll probably be fine, but it's obviously a rough situation here in the market. Alton. Alton, I rarely use straddles. The reason is they just have a very low win-loss ratio. It's kind of like straddles and strangles are kind of like saying, you know what, I don't know what's going to happen, so I'm just going to bet on both sides. And I didn't become a technical trader to just guess. So that's an issue for me. I hope you understand that. I'm not saying that it's a bad strategy. It's just not a strategy for me. I don't know. Did Roku have some money? It wouldn't surprise me if they had some money in one of the failed banks. That wouldn't surprise me at all. RSG. Bullish candle there today. Nice bullish engulfing. You'll want to kind of keep in mind it's right there at the downtrend. It's trying to come up here. I certainly couldn't fault you for taking a position in here. If you like that, your stop loss needs to be underneath this support area, I think, to take that trade. And then I think you're going to have to be willing to let this come all the way back and test, because we really need to break this downtrend out and hold. And you guys can't see that. I just drew on the screen and you can't see it, but we need to break this downtrend here. I want to see us pop above here and then pull back and hold and prove that it can stay in there, and then look for the entry signal in trade. The way I see this right now is we have a situation where you could fail right here at this downtrend. Um, just imagine the folks that right here thought, hey, this is the buy, and they bought into that. This is still a lower high. So, um, yeah, well, I've actually got a drawing tool that's a lot more descriptive, Alton, than what I'm using here, but and that you can't see. RBLX. Oh, and Roku. Yeah, thank you, Ed. But when we're pressing right against that resistance, that's usually where I want to be really, really careful. Um, and if you look critically at this, we look right in here. That's a pretty big level of price resistance level right across there that it's got a challenge at the same time. It's trying to break that downtrend. So it's not quite for me. Not saying that it's bad, just not quite for me. Seeing Amazon's trying to bounce here. Um, might be worth keeping an eye on this if retail is going to come back around. Clearly, we have downtrend here to be paying attention to, and some price supports to be paying attention to. Microsoft, nice bullish candle here today. Um, Double bottom, holding at this support. I think if I were going to be looking long, chart like that might be something that I would be looking at. Could be just a bull put credit spread. Let me take a real quick look, guys. You're not going to be able to see this, but let me see if there's a bull put in here that would be of interest on Microsoft with that double bottom. It's not quite enough premium yet. We would probably need a little pullback for this to work. But it would be selling the 245. That'd be your short strike, and then buying the 240. The problem is it's really close to price, and with the volatility of the market right now, it would add some risk to that trade. Let's take a look at this a different way. And since I can't show my screen here, I'll just have to lay it out on the chart so you can maybe get an idea what I'm thinking here. I'm thinking about a reverse ratio. Okay, this reverse ratio would be selling 2 of the 240s. So your short strike is the 240. Okay. The reason I like this better is it gives me more space in here on to protect this trade. So you short the 240s and then you buy. You're going to be buying 3 of the 225s. And this is an out of the money reverse ratio. It's what I call it, a reverse ratio. Um, so once again, it would be selling 2, buying 3, And right now, that carries a $3 credit to enter that trade. Carries a $3.03 credit. The margin risk on that trade is $2,697. So that would kick out a lot of folks. They would not want to take that trade. You could probably trade this as a 1x2 if you wanted a little bit less risk on it. The problem is that's only going to bring in 52 cents credit. So it wouldn't really be enough for me to, it wouldn't be enough credit. I like the $3 a share credit a little bit better on this. Probability, let me take a look. This again, you guys can't see this, which is kind of not fun. I can't show you this. This would have very high probability. You're about a 70% probability that this will be a profitable trade, a maximum profit trade. You have a 71% chance of break even on the trade. So what we would want with this is we'd want to see Microsoft, even if it rests or pulls back. By the way, the cutoff in this trade, cutoff would be the stop loss. If we broke below this support here, that would be the exit. Get out of that trade. And by the way, guys, for those listening that aren't normally in RWO, one of the ways we made really good money with a ratio spread trade on IWM, ratio spread trade on the diamonds. Both of those ended up with ultimate gains of over 80% really quick. So if we were to bounce here in Microsoft and this just moves away from us, you've only, in this trade, you've got what's left 39 days. 39 days left on this. So theta is going to be working heavily here. And if Microsoft holds, remember, all it's got to do is hold above the short strike. Holds above the short strike and you make $3 a share. NVIDIA, I think, is hanging in there pretty good. If this holds support and follows through, I could certainly see a buy. I would watch that closely. Right now, I'm still holding a small position in NVIDIA. I've been holding this for a while. Current profit on my NVIDIA position is 41%. And by the way, that's a stock position. So that's looking pretty good. AMD bouncing here this afternoon, or this morning, I should say. Pulling back into this price support area. Keep an eye right in here. This trend is really, really flat. I'd hate to have to see that consolidate or rest that long. But if this can hold, maybe we have to use this trend here. And if that holds in this area here, we've already hammered this pattern on the day. If that follows through to the upside, AMD might be an opportunity for an entry. I will tell you, I think any rally back in the indexes, unless the Fed just suddenly decides that they're going to start printing money again, then I think any rally back in these indexes just set up the next opportunity short. Because you have to remember, we are in downtrends. And as we rally back, we're going to slam into these resistance levels. So unless they just decide that they're going to start printing or take off in a big way on this to completely reverse their fight of inflation, then I think these resistance levels are going to be meaningful. If it's not here, I mean, just keep looking. Lots of resistance up here, and then we run into the downtrend. And you can see more downside. You know, the other thing to remember is we're really running out of the earnings inspiration. We're just about to enter the blackout period for stock buybacks until the next quarter earnings. And that's going to create some slowing, I think. The heavy manipulation that we've seen in the earnings here lately is going away. So I think it's just more than anything just to bounce back on Lilly. Chase, I don't, it's up 4%. It's not like, I mean, we've had these big pop-ups here before. There's one that popped and turned all the way back around. So I don't know that I would rush to the big white candle simply because whoops, you can't see what I'm drawing there. Here's that candle that popped up and completely reversed. We've seen these big rallies here that didn't hold. And all we're doing at the moment is rallying back into the downtrend. So there's probably some news on there, but of some kind that's popping that up. But I would not necessarily say this is just an all clear move until it breaks that downtrend and resistance and holds. Thank you, D Bond. Appreciate it. I think some emergency measures. I think the Fed's really in trouble here. They've really worked themselves into a bad situation fighting inflation and then already starting to see bank failures. It's a tough thing for it's a tough thing for them to have to deal with. If you guys like a little bit more aggressive inverse ETFs, take a look at SQQQ. It is pulling back here today as we rally. But if it finds a price support or trend in here and we continue to see selling, you might want to keep an eye on that. We need this relief rally. It's nice to see this relief rally if it can continue. Our T2122 was definitely oversold. Whoops, there we go. Definitely oversold. And you can see at the moment here, T2122, for those who have never seen it before, it's a proprietary, the only place I know you can find it is on TC2000. And it's a 4-week new high, new low ratio. And what you can see, one of the reasons that gave me confidence to be short this market is because we had been up here in this overbought area here for a while, convinced me to hold and continue short. And obviously that really paid off. Now, T2122, we sank so hard so fast that I think there is an opportunity in here that we could get a significant rally to the upside, assuming that the Fed is going, I don't know what the change is going to be, how they're going to stop this contagion that's going on. But watch this carefully, because if we come up out of this bottom, I think there's reason to believe that we should bounce as long as we don't see more bank failures. Our T2108. By the way, guys, if you're interested in TC2000, let me know. I can share a link with you where you can get a discount on it. But I got to tell you, it is hands down, the best charting platform out there, if you ask me, because of some of the tools like this and the ease of use. T2108, we've got only 19% of our stocks holding above the 40-day moving average. Pretty tough to say that's bullish. But it's also easy to look at that and say we're oversold and we need a little bit of a bounce. You can see last year's lows, we were down here only 10, 11% of the market above their 40-day moving average. So it would really kind of suggest we should get some kind of bullish relief here eventually, as long as this contagion doesn't spread and we start to see more bank failures and issues along that line. So what about covered calls on SQQQ? Are you already long SQQQ? If I were long this, if I were already in a position to the upside, I would definitely consider covered calls, because this is a double short of the QQQ, and the implied volatility is huge. The implied volatility of the options is huge. So it would be a great way to hedge that position. Oh yeah. Yeah, here, just a second. I'll get you that link. If you guys have any questions about TC2000, I'd be happy to share it. It is answer some of those questions. It's just hands down the best charting software out there, in my opinion. And I've used lots of different charting softwares. There's the link for TC2000 discount. Yeah, there is. For some of the tools, you're just not going to find anything that would be close to comparable. And the ease of finding stuff, getting to where you need to go, finding charts. Yeah, what I would suggest, if you have a bunch of questions, first, if you go to my YouTube channel, I have a short tutorial series on TC2000 and how I use it. That's just awesome, in my opinion. They're trying to hold big techs. Google trying to bounce here. Google's had this major problem here with Microsoft beating them to the IA world. And as you can see, we've got this interesting little wedge here. We tried to shoot up, failed, and then failed right there on that. After we broke down through here, as you can see, we broke down through and then rallied back and failed right there. And now we have failed again at a lower high. So kind of an interesting situation here in Google. It is trying to bounce here off this downtrend. But boy, I tell you what, I think there's some high risk in this trade. And you toss in this resistance area that we got here in the chart right now. And well, that's just going to be a little bit of a challenge here to see whether Google is actually going to break through to the upside or if it's going to eventually fail. here. It's kind of a remarkable when you think about it. Seeing Google down here sub $100, you would think it's going to be a great deal, but um, it might not be a great deal, particularly with the issues that these big techs are struggling with right now, and more regulation, not only here in the United States but Europe. The challenges that they're facing here on their social media platforms, and there really is, I think, a very real possibility that we're going to hear about more layoffs. Oh, Craig, Microsoft just laid off a lot of their AI team. Yeah. I think the costs to these companies are starting to get pretty heavy by comparison to their sales because the consumer is weak at the moment. Just the inflation is causing more and more trouble out there for them. Um, I think we should keep an eye on TSM, Taiwan Semiconductor. It's had some struggles here, but you can see um, pretty nice pattern here. If you and I can't really draw this out with because I don't have the tools that I normally have here for this, but you can see right in here we've got this inverted head and shoulders pattern that developed here, and now we broke out and we're coming back to test that neckline in that chart. Now, unfortunately, we made a lower high over here. But if this can hold in this area here, as you can see, if I were to draw a trend up through here, we're right in that place. We may have slipped past a little bit, but we're right in that place where we could still gain a little bit of upside momentum here and pop through. I think TSM might be one that would be interesting to put on a list. For those in right way options know that I'm holding this position in TLT. My goodness, what a what an increase in TLT. And again, I think this is where everyone is running to safety of some kind right now. There's so much uncertainty. They're running to the certainty of bonds, just locking down money at a low rate of return, but locking down money to protect themselves. If we break through these resistance levels up here in TLT, if that were to pop up, darn it, keep trying to go to my old drawing tools here. If that can break through up here and then prove up in here to hold a higher low, I'm going to back up the truck. I'm going to buy lots of TLT because I can just imagine if all TLT does is come back to midway, just a reversion to the mean. There's going to be a lot of money to be made here if that does occur. Keep an eye on that. And as everyone runs to bonds, the bond yields are falling, the demand is coming in, and I think there's even a chance that the big institutional banks are going to have to start buying up a bunch of these bonds to backstop their depositors and things because of the circumstances that we're seeing here in the market. There's even a possibility that they floated this idea last year, and I would say Yellen's probably under pretty big pressure at the moment for the Treasury Department to go in and sell all their low yield bonds and start buying up the higher yielding bonds to create a market for the institutions to buy, to put the Treasury in as support on bonds, and then to see institutions would run, I think, in a wave to pick up bonds if the Fed puts a floor underneath it. And they were talking about that last year, could be coming as early as May of this year, where the Treasury might do that. Well, now we're seeing bank failures and things like that starting to happen. Maybe they need to step up into that program a little bit sooner um, um, on that that twist is really what it is. They're going to be using the same money that they're already in these bonds on. They're going to sell them, um, I think at the lower yield, and then buy the higher yielding bonds with the same money, but putting a floor in it for the institutions. Any questions that I can answer, guys? I, I I really do think this is going to be kind of a risky place to be, as we wait for the Fed to see what manipulations they're going to do to try and help. Um, oh yeah, Craig, I think there's going to be more layoffs, and not just in tech. I think we're going to start seeing layoffs. If you've been looking at our manufacturing numbers, those manufacturing numbers are absolutely horrible. Um, there's very likely we could begin to see manufacturing layoffs and even service layoffs. The service sector has been one of those hot sectors here for a while to be in, and well, I think when the consumer pulls back and slows down, when the consumer starts to feel fear, they don't spend as much, and we might see some big layoffs in that consumer sector. So you'll have to be, well, we'll have to be pretty careful, um, for that. So let's see what else we have going here. Um, yeah, I don't really have confidence in techs right now, Alton. And I know that really flies in the face of, what everyone believes, that tech can never do wrong. Um, but I think tech is going to struggle here for a while. I really do. I think the next couple of quarters of earnings on tech are going to be tough, really tough. And we may see some more downside here. I got to tell you, I think the place, and let's talk about this for a minute. In just a second, I need to answer this question for Mason on GLD. GLD, extremely strong here. Um, I would be really careful, Mason, in chasing it, um, on this big move up. Gap and run like this is the perfect setup for a pullback. So if this were to rest and pull back, consolidate a little bit and hold one of these support levels in here, just hold a support level, rest, put in a higher low. By the way, that's how a trend begins. Um, we have to break the downtrend here and hold a higher low to establish an uptrend. Okay. So right now you're in that situation. This is a knee-jerk reaction. You could really see that if the Fed comes in and makes a policy shift, they could drive gold right back down and down hard. So I would be really careful in chasing it when it's up so much. Um, here from our last low in here down to here, you're looking at a good 10% in gold. If you think about the volatility of options and you want to buy calls, you can easily see 30-40% pullback in those options quick if the Fed makes some kind of policy adjustment that really shocks the market here. But if it were to rest and pull back and relax a little bit, then I think there'd be an opportunity to go long gold. Um, because I think there is some legitimate worry about our financial system right now, and all the debt that's being carried out there. So I would watch that, but I wouldn't want to chase it. Um, UNG, yeah, I mentioned UNG when we first came on, Gator. I think UNG could be setting up here. It still needs some work. We got to get through this resistance up here. It's not quite it's not quite there for me. Um, but it's building up the way I wanted to see it build up. It really all depends though if we're going to see the demand destruction here in the economy, um, as consumers pull back and protect themselves. So you do have to consider that in commodities. What I was suggesting, rather than tech, Alton, I think there's a real chance that we could see, um, some big changes in the mining sector. Um, and the reason I say that is because if we're going to try and even come close to hitting these targets of putting everybody in electric vehicles, um, and I'm not saying that that's the right thing. As a matter of fact, I would be on the other side. I think the way we're moving here is dumb because we don't have the infrastructure to support it. But if that were the case, if that's where we're going to go, we're going to need some of the most impressive mining over the next 10 years than we've ever seen. I mean, it's just going to have to be remarkable. Um, there's about the copper that's inside an EV is like 4 or 5 times more than it is in a standard car. The graphite needed, massive amounts of graphite for the batteries, massive amounts of lithium are going to be needed, for that. An EV car, for the minerals it requires, um, is huge, absolutely huge by comparison to to a standard vehicle. And so, if we're going to go that direction, we're going to need a lot of natural resources. We're going to have to dig up and refine tons and tons and tons of materials to be able to do this. And that's just the first step. Then we still need to build the power structure and the infrastructure to be able to charge all of these vehicles across the country. We don't have the network to do that. Um, to power all of this. So, and while we're running to wind and solar, which is great, we can use all of that power, all the power we can get. When you're driving your car, you need to power up, you're really not going to want to wait for the wind to blow or the sun to come up so that you can start charging your car. Um, we're going to need massive amounts of fossil fuels just to dig all of this stuff out of the ground, and refine it. Yeah, and diesel. That's right. We're going to just need massive amounts of it to because of the energy costs to dig it out of the ground and refine it are phenomenal. So I would look at oil exploration. I would look at anything mining in lithium, the standard metals, copper and silver. Silver is an industrial metal as well as a precious metal. Those kind of things are going to be in unbelievable demand. And we're seeing it everywhere. Everybody's racing to put out electric vehicles. I saw John Deere just came out with with a big show for their electric mowers now. And all of this requires massive amounts. Yeah, cobalt. Yeah, massive amounts of mined materials and refined materials, and everything's going to battery. Um, so it's going to be an interesting circumstance here, and I think there may be a wave of mining coming that could be substantial. We're going to need so many materials. Um, Otherwise, this whole thing falls flat on its face. I mean, we don't have near enough. Even in the discovered copper reserves or copper deposits that we know of right now, we don't have near enough copper to even put a small portion of people into electric vehicles. We're going to need massive new discoveries, massive new mines to make that happen. Um, then start looking at the stocks like John Deere. John Deere creates all of this great big heavy equipment for mining. You've got Caterpillar that will be putting, could be huge numbers of things that'll have to be built to mine this stuff out, and then start thinking about some of the engines that run these things, like Cummins. That might be an interesting area. Um, so it'll be interesting. Big copper discovery in Alaska. Here's the problem. Here in the United States, um, Crossdog, here in the United States, we have lots of deposits of things that have been discovered, but our government won't let them be dug up. It's possible. It would be a complete rebuild of our electric infrastructure. Um, um, right now, and all you got to do, is just go look at what we have for available materials to do this, and we are far short of even really making a dent in that situation. Just imagine the electric grid that'll have to go around everywhere in the country to supply power to all these electric vehicles sitting around being charged. It'll be massive. Uranium is here in the United States. We haven't really made that move to nuclear, but we can see Japan is restarting a lot of their. They shut them down after the Fukushima um, issue and the tsunami, but they're restarting those now, bringing those back up. China has committed to build a bunch of nuclear power plants, um, and some of these uranium plays might be something to be thinking about as well if we're going to go that direction. Oh, the grid's so far inadequate and it's so fragile. We're talking about a rebuild of the nation, and and we're going to have to dig up some countries, or we're going to have to dig up most of the country to find the materials to do it. So taking a look at CCJ, UUUU, URA might be some of the uranium plays that you might want to put on a list and pay attention to. Be careful what you wish for there, Scott, because so far, the federal government hasn't done a good job managing that at all. As a matter of fact, they're not doing anything to harden the system that we currently have. And that is a huge risk. Oh, I know the infrastructure builds that we're going to need for these things um, to grow that system is substantial. Tesla, Tesla might be an interesting one to watch if that can hold this support. BMW is trying to put in a higher low. We kind of broke this downtrend here. Now, clearly, we've got some resistance here in the chart to be thinking about as we move back up. But VMW trying to hang in there might be worth keeping an eye on. About some Activision. It's a nice little pattern in here running in an upside trend. It is dangerous because of the big point whipsaws that this has been making. But as you can see, if we can hold support in here and rest a little bit, there may be some opportunities at Activision coming along. Maybe a test up into here at least. James, you're so right. And what's funny is when we dig all this uranium out of the ground, what's the fuel source that helps us enrich it? Oil and gas. One of the biggest, newest deposits we know of is over there in, the place we just abandoned um, over there in the Middle East. And we essentially turned over our a multi-billion dollar um, airbase over there to the Chinese. We really just gave them a pretty hard lock on all of the rare earth metals over there. Um, yeah, that's exactly right, James. The when we refine all of these materials for these things, we do it mostly with fossil fuels, oil, gas, coal. That's how we drive that refinement because it's still the cheapest available energy out there. Um, so not so happy there in Marvel. Betsy's trying to bounce up, but again, not very happy there. Yes, is trying to catch some price support in here. Got some work to do. That is hanging in. The bullish looking chart. I'd keep an eye on Meta. The big tech giants are holding in there pretty nicely today. Nothing else so much, but the big tech giants are hanging in. I want to take a look at Spotify. Spotify might be setting up here. By the way, guys, if you have trades or ideas of something that you want me to look at or lay out, just let me know. With the potential volatility, um, Fed announcement likely coming yet today. Boy, I would want to be really, really careful for entering anything. I would be more inclined, honestly, to just what I don't day trade stocks. Um, um, for those folks that are listening that have never listened to me before, um, I don't day trade stocks, but I do day trade the Dow Jones E-mini futures, and I have for I don't know years. It's the only chart I day trade. It's the only thing I day trade, and I do really well with that. Um, but that would be about, I think, quick in and out trades right now would be about all I would be too interested in until we kind of figure out what's going to happen, with these major issues. Look at the big recovery there. There's the kind of things I'm talking about. We're down 80%. Now we're only down 52%. Um, we're talking about some really big tear your face off moves in the market that could be coming up. BFC is trying to bounce back here. Bank of America is trying to bounce back. Watch these resistance levels as we catch these in here on these charts. It'll be just really interesting to see what the Fed comes up with and how that moves the market, or whether it be up or down. I just don't know. Carol, yeah, I think there will be, unless particular, unless we see the Fed just completely change everything. Say we're no longer going to fight inflation, those kind of things, which is possible if the banking situation maybe got bad enough. I think if they do that, we're looking at the end game for our financial system. But um, rally back to these resistance areas in the chart. I can't see how that's going to create shorting opportunities. Unless they just, like I say, change something up completely. CRWD looks like a potential buy here. CRWD coming up, it's still in its rounded bottom breakout. Not quite a trap long here, slipped underneath, but I think that's a pretty nice looking chart. Maybe needs a few more days of rest. What I would typically do with something like this is I'm just going to place a price alert right across here. Pop me up through there. Yeah, I'm going to go just a tiny bit higher. Pop me up through here, and then I'd be interested. Yeah, I saw HSBC um, went in to save the UK edition of Silicon Valley Bank. You think they will, Mr. Wall Street? I'm not sure they will. 2008 is a little bit still too fresh in people's minds. And if the fear of something like that crops up, I'm not sure they'll forget about it. And I personally believe, I could be wrong, but I personally believe second and third quarter earnings are going to be really tough. I think we're going to see a lot of misses, even on lowered estimates. Um, as the consumer pulls back because they're kind of out of money. That's it does have all those kind of earmarks, doesn't it? Of a big financial crisis that could be on the way. We'll see. Here's another one. You know, um, people like to promote that there's no way they'll let this fail. There's no way it can fail. But we also have to remember that Bear Stearns had been on the stock exchange for 150 years or something like that when it went under. We've saw two major banks go bankrupt in 48 hours. Um, if they don't stop that, if they can't stem that tide, it could get pretty ugly pretty fast. And I don't know which way it's going to go. I think it's pretty high risk. Again, quick intraday, I got no problem with that. I mean, if you just want to go in and take a quick hit of money out of the market, you certainly can that way. But to really buy into some of these dips and suggest that it has to be over, hmm, well, you're braver than I am. I worked really hard for my money, and I don't like giving it away that way. By the way, another place to kind of be looking here, besides gold and silver and stuff like that, take a look at the miners, guys. GDXJ, these are the junior miners. GDX, um, gold miners. Take a look at a lot of these miners starting to come up here. If precious metals really start to pick up, there could be some nice opportunities there. SO. If it were to show me a failure up here, Jason, show me some kind of pattern failure in here, then maybe I can see what you're looking at. We've got this little downtrending situation here, and we're breaking this little uptrending here. But would I short it on this candle? I don't think I would. Um, if it were to rally back up into here and then show me failure, then I would. If it were to consolidate sideways and then show me failure, then I would. There's too much trend in here, even though that really short-term trend has given up. There's just too much trend and too much support in here for me to get very confidently short on that. AG, yeah. There's going to be a lot of these, Barrett Gold. There's going to be a lot of these potentially setting up if gold gets stronger here. How do you tell what's stronger? Well, GLD. First off, GLD is not diversified. It's paper gold. So not really a diversification here in GLD. But if you look at like the GDXJ, this is a diversified ETF. One of the things I really love about TC2000 is I can click one icon and see all of the stocks in a list that make up the junior miners vector in this junior miners fund. So you could go through these. There's 36 stocks in here, and go check them out, see what you think, and do a little research on them that way. JUNG, whoops, JNUG. Sorry, can't type. JNUG. This is a 2 times bull, so this is double leveraged on this. And the problem with something like this, Mark, is you don't really know what your position is. You have to go to Dextron's website and see how they're gaining 2 times leverage into the space. They're going to be using sometimes these futures like gold and silver futures and things like that. With gold miners, they're probably using gold. Sometimes, oftentimes they're using options of all different kinds of expirations to achieve that double leverage in there. So it would be quite a study to find out if you believe they are stronger than, and really it comes down to the management of that ETF on how they manage the double leverage, the mix of options and futures and things that they trade in that fund to do that. So I think me personally, I would like to stick to an ETF, more like this, where I can actually go look over those stocks and feel a little bit more comfortable about the position I might be taking here. Clearly, in an ETF like this, you also you kind of have to trust the management. I'm in here, but at least I can see what they own. I can go to their website and find out the mix of what they own. Um, so I would be kind of default to that, or default directly to the individual miners themselves, that you might find to be better positioned. DKNG was trying to get something going here, drifting down below a little bit of price support in here in the chart. And you'll notice that we've drifted beyond our trend here. So you'll want to consider this lower high in here. And again, we have that possibility that we could rally right back into that resistance and then show failure. So I think there's a big question mark here right now on DKNG, because we're kind of slipping beyond our trend right at the moment and this resistance. If we can cross back above that resistance and hold it as support, then I'm long with you. But I see that, also see that potential that we could smack our head into that resistance and then sink for a while, move to the downside. So it's right there in that very questionable no man's land for me. I don't know if that answered your question, but that's kind of where I am right now. Hey Kyle, how you doing? Yeah, we were having trouble with our pro trader, our trading room today. It's a media server issue out there, and I don't know if they've got that fixed yet or not. But while everyone was waiting for me, I said, let's see if I can just go live here for a bit, answer some questions and that kind of thing. We're not holding too many positions right now in right way options because we sold off a bunch of positions um, last week. Took some very nice profits um, on that short side move to the downside. And right now, I'm just kind of coasting here just a little bit, just waiting to see what the Fed actions are going to be, how much this contagion may catch on, or if they're going to be able to put together some kind of a fancy plan um, to turn things right around without printing more money and increasing our problem with inflation. So a little bit light right now. We're supposed to be hearing sometime here anytime from a FOMC meeting that's going on and maybe a plan of attack. And that could have some major impacts on the market. No, you'd have to go to here just a second. Um, Go to the hit and run candlesticks. If I can type. You go to the hit and run candlesticks website. You can find out about right way options. Um, you know why I'm here. Let's just explain a little bit about it. Um, I started trading a long time ago. I've been trading over 30 years. Now, a lot of those years, I didn't do very well. Like most folks, you got to, pay your dues. I was lucky that I finally got the discipline and the simplicity that I needed to be successful in the market taken care of, and have been trading profitably now for a long time, full time, more than 20 years. Um, I started teaching, I can't remember, 8, 10 years ago, maybe more. Actually started even before that. For my local community and stuff, I started teaching trading in the community college. Um, and then got started with a lot of encouragement to start right way options, I'll say. Because I wasn't really, um, I never thought that there was, I still to this day, there's nothing special about me. Um, I'm an old carpenter that happen to figure out how to make a living trading, and have been doing it now for a long time. So the Right Way Option Service is a very um, open service. I answer members of Right Way Options are like family. Um, we work together to help each other improve our trading. We I spend lots of time educating. So, for example, I come on the microphone just before the market opens, and I'm usually there for 45 minutes to an hour. Then I break away for just a little bit, and then I'm on the microphone doing a direct 2 hours a day where you guys can ask me any questions about option strategies, option setups, trade setups, anything. Plus, I send out trade alerts. I only send out trades that I am willing to put my money in. I'm very transparent on that. I don't do anything that's. I don't trade a fake model, what they call a model portfolio, where they put up alerts in some places, but nobody's actually the people who suggest them aren't really trading them. They trade them in paper. I only trade what I'm in. I only post. That was kind of a stupid statement. I only post what I am actually willing to risk my money on, and I share all the results, win, lose, or draw. Um, I've got about a little bit right now for many years. Um, I've maintained a 70% win loss ratio in my trading. Um, but to do that, I am very disciplined to a set of rules. Just because the market's open and I woke up today is not a reason for me to trade. I want trades that are um, very well defined and high probability. And even when I do that, as picky as I am, I lose about 30% of my trades. But because I've been able to maintain such a high win loss ratio, I've grown my account year over year over year. Um, continue to grow my account. I am far luckier. I live better than I truly deserve. Um, and it's all real and upfront. There's no um, for example, we had some trades last week that I closed for 80% and that I'd only held 2 or 3 days. And to me, that's just another trade. It's just a part of doing business. There's nothing to get overly excited about. I made big dollars on those trades, but it's just another day of business, of doing business. Um, and so I don't get into all of the hype. Um, I'm not chasing around like crazy trying to catch every flavor of the day wild speculation stuff that's going on. That doesn't interest me. Um, I'm worried about consistency. I want consistency in my trading. And that means I have to stay disciplined to a set of rules and a set of guidelines to maintain consistency. Because, I don't know about you guys, but my bills come every month consistently. They don't stop just because the market was bad, or just because um, um, I chose to do a bunch of wild trading and lost a whole bunch of money this month. I still have to pay my bills. And to maintain full time trading as a living, you've got to figure out consistency. You just absolutely have to, because there's no other way to do it. And when you look at right way options, look at it as a team. It's a team of people that get together every single day to work really hard to help each other improve. Um, I just happen to be the guy on the microphone. But there is nothing special about me except maybe that one simple thing, in that with a lot of hard work, I developed a trading plan and a discipline that works. And I just repeat the same things over and over and over. Um, so I do 2 hours of live education every day during the Right Way Option session. Plus, I do a minimum of 4 e-learning sessions every month. 2 in the evening, two during the market day. I put out videos every single day on YouTube, to try and help people as much as possible in their trading. So um, I always tell people I'm only as good as my next trade. It doesn't matter. It doesn't matter what my track record is. That's history. It's my next trade that's the most important one. Because if I don't get that one right, my win-loss ratio falls apart, right? So it's always the next trade that makes the difference. And the I have to stay grounded. I have to stay humble. I have to stay focused. I have to not think that because I've had a series of winners that suddenly I'm the king of the world and I can never make a mistake. How many of you guys have done that, where you've had a series of wins? And as a matter of fact, how many of you in 2021 felt like you got the world wired? Everything's great. Never going to be a problem with my trading until the market changed. One of the mistakes people often make in the market is yeah, exactly, you get cocky. That's right. Um, People will often mistake a bull market for being genius. Okay. Um, because we have to be able to work through all market conditions. We have to be able to look at charts. Um, we have to be able to look at them for what they are, not for what we want them to be. Okay. We have to, for example, I get a lot of kickback. Okay. Um, I had someone post on the YouTube channel the other day because I was going through the economic numbers and saying, guys, this isn't good. And eventually we're going to pay for this, as the market kept rolling up. And then someone commented on the YouTube channel kind of snidely, like, so now you think you're an economist. But I never made any kind of um, assumption that I was an economist. But you can choose to ignore this if you want to, but at your own demise. You see, none of us are big enough to fight the market. None of us are big enough to look at a chart and say, I know something that the market doesn't know. When you look at a chart like just DKNG here, envision this. Everyone that's trading this stock, all the insiders, all the institutions, CEO, CFO, everyone trading this stock. The price action that's displayed on this chart right now is the collective knowledge of everyone trading this chart. And if we look at this chart and we choose to only see it as bullish, that it has to be bullish, and we fail to recognize the resistance levels in the chart, we fail to recognize the trend breaks, then we are putting ourselves in a position where we think we can predict something that the rest of the market can't see. If there's one strength of the discipline that I've developed, it is my willingness to look at a chart for what it is, not for what I want it to be. Okay. So, for example, while everyone was just absolutely certain the market was going up, I was warning and cautioning everyone here. I was warning and cautioning for the folks that are RWO members that are here, if you guys would confirm that I'm just not telling tales here. Over here, I was preparing everyone to be short in the market. We had a great year last year because I could see in the chart that we were running into trouble. And I was willing to see it. People will mistake that I am trying to be, I just want to be bearish or I just want to be bullish. And that's not the case. I want to move with the market direction. That's all I want to do. I want to move with the market direction. I don't want to predict anything. Because, guys, ask yourself this question and be real honest with yourself. Take this time right now, be real honest with yourself. In all of the study and technical analysis and all of the folks that you follow and all the predictions that everyone's doing out there, is your account improving? See, predicting doesn't work. If right now, 80% of the market, of the money in the market is controlled by the institutions. You can predict all you want. If the institutions aren't going to move a stock or a market in a specific direction, there isn't anything you and I can do about it. Not one thing. Okay. So we have to be smart enough to just learn to follow the market condition and stop predicting. And if we're willing to see the chart for what it is, rather than what we want it to be, we gain an edge. Because then all we're really doing is following the institutions in the market, and it makes it much, much easier to make money. So, yes, I do teach how to use covered calls. As a matter of fact, there's really no option strategy that I can't teach you. There's some that I don't trade because I don't like them personally, but there are a lot of things that we do to hedge trades, enhance the profits of trades by utilizing the true power of options, which, by the way, is not speculation. So much of the world today thinks options were made just to speculate and wildly gamble in the market. That's not why they were created. Okay? They were created for the purposes of the institutions having a method of hedging their risk. That's why they were created. What it's become, as Warren Buffett has said, is we've turned derivative trading into, he called it a gambling parlor. Instead of a casino. He's still that old guy, calls them a gambling parlor. But options were truly made for the purposes of hedging and managing risk on trade. So I do teach that a lot. As a matter of fact, if you go out on my YouTube channel, you'll find there are classes that I've posted out there on hedging, the things to do to hedge. Um, Not only short-term swing trading, but also position longer-term stuff that you can do and make massive profits. Robinhood did a study um, and found of all of and we get the impression that day trading is the only thing that there is to do. Oh, day trading, got to be a day trader. Robinhood did a study, and 90% of day traders lose money. And people say, well, the broker wouldn't put stuff out. They wouldn't do anything that would be bad for me. Um, you need to think about that carefully, because the broker's job is to create the next transaction. If you want to, trade Jello shots for money, they'll create something that you can trade with it, so they can generate the commission. They can generate the fee. Okay, so they have really pushed. They generate so much money encouraging all this day trading, even though most people lose money doing it. And that's just the fact. Um, not only did Robinhood find that, but they found that within 2 years, most day traders lost their account. They went broke. Okay. Well, that's partially true, since they're not collecting true commissions anymore, but they collect trade fees. Okay. So every contract you trade, every position, there's a trade fee that you pay beyond what they get for being paid for order flow. Okay. Hey, Jim. Um, we were having trouble with our trading room today. Server problem that I couldn't do anything about. The company was working on it, and I thought, well, I'll just go live here for a while and invite everybody over. Um, Trading. I'm getting a private message from Chris. Chris, um, if you're still listening here, do you consider weekly or hourly timeframes when trading the daily for CRWD, or would I consider? Um, if you want the quick intraday, here's what I would say. I don't trade intraday charts. I can. I choose not to. Okay. There's so much noise in this market right now. I just choose not to. But if you like to do that, what I would suggest, whatever time frame you mentioned, an hourly time frame, um, then pick your time frame and trade it. One of the problems that people have in this market is they never settle down into anything. How many of you in here, type a Y if you would admit that? You're trying to be the jack of all trades. You're trying to be intraday traders, you're trying to be swing traders, you're trying to be longer term traders, you're trying to trade options, you're trying to trade futures, you're trying to be the jack of all trades, and you're mastering nothing. What we want to do is we want to first settle into something first, master it, get good at it, prove to yourself that you can make money doing it consistently, and then add something else after you've reached that level of success. When I look at CRWD, and all I've got to do is I've just got to draw this hour. You've mentioned hourly, that's why I put it up. That's still a downtrend. And so for me, looking at this right in here, If I were intraday trading on an hourly, I have to look at this right now as a possible short. I certainly have to be concerned about this big level of price support, but we have a potential failure at downtrend and price resistance. Now, when I look at the daily chart, I see the daily chart is holding a support level, and that possibility that if it could cross back over that downtrend and hold, it could be bullish. Okay. But again, I have to look at the chart I'm trading. If I'm trading a 5-minute chart, then trade a 5-minute chart. The 5-minute chart's short. Okay. There's our lower high failure, our consolidation. There's our short. Exactly right, James. Learn something and build on it. Just find a time frame and stick to it. Um, and I'm going to say the same thing about indicators. So there's so much overdoing of indicators, and people will, oh my gosh, do this. I'm going to give you an example. I teach a strategy. I do a strategy about 3/8 trap. It's a very, very simple strategy. I've just recently taught 2 classes on this. Um, I've helped thousands of people turn their trading around with this very simple strategy. But people will ask questions like this, "Hey, Doug, and they're really serious and they're worried about this because I see somebody else and they're using the 3 exponential moving average, but they're using it on the high rather than end of day." Okay. So I just changed that to a high. How many of you guys change your idea on that trade by doing that? This is a 3 moving average. If that changes your opinion on this trade, you got bigger problems. Okay. What you're trying to use as indicators to predict a trade, you're not following price. So it doesn't matter what time frame you follow. Just pick something and follow it. Because the more you work at that, the more you find those price patterns that repeat themselves over and over and over, then that's all you have to do. And you scale those trades up as you start making money. But so many people get caught up in this minutia, and it has nothing to do with looking at the price action chart, what the price is doing. Remember, we only get paid when price moves. There's never ever been an indicator ever send you a check for anything. I don't care if price moves up or price moves down. Just show me which way you're moving, I can make money. And it has nothing to do with the indicator. EI, I'm going back on some of these questions I missed. Where did I start my education process? I started doing a lot of study and technical analysis, and I ended up taking a course um, from a lady. It was the first class she'd ever taught. Um, this was back before internet classes. We all showed up at an airport, at an airport hotel, that is, in a big conference room, and she gave us binders full of material, and we spent 2 days going through her course and her strategy and things like that. And that's kind of where I started. And then from then on, it's just the work to build a trading plan and discipline to follow it that really makes the difference. Um, I'll give you an example. You guys can find this interview over on my YouTube channel. It's called Interview with Mike Peterson. Mike Peterson is a guy, older guy. Um, I'm 60. I think he's like 63, 64, something like that. Never ever traded before. Um, I taught him how to trade the 3/8 trap strategy. But what Mike did that's different than what a lot of people do is they want immediate gratification. They want to immediately be making money. Just tell me what the trade is. And then they try to trade it. If you don't understand the why of a trade, you'll manage that trade completely differently. If you don't know why this is a good trade, why you want to do this, what the rules of the trade are, it's not going to work for you. And so what Mike did is he took that strategy and he practiced it in paper trading for a full year. A full year. He sat in front of his computer screen, putting on paper trades and managing them until he proved to himself that I got this. I'm making good money on my paper trades. I'm winning more trades than I'm losing. He went live in his account. He hasn't looked back since. His first year trading live, he increased his account by 65%. And that's what I mean when I go back to that idea. It's about mastering something that makes the difference. And it doesn't really matter what it is. You just have to find your niche and then get good at repeating the same thing over and over and over. Okay? That's what it's all about. Is finding repetitive patterns in the market, injecting yourself into that and become a master of something. That's all you need to make money, because I basically only trade two patterns in the market, two price patterns in the market. I built my entire career out of two price patterns. Will I add the TLT? Yes, Jim. If TLT can prove to break out of this resistance up here and hold it as support, yes. Not only will I be buying it, I'll be buying a lot of it. I'm going to see, because I think once that turn occurs, we're coming back up at least halfway. It'll take some time, probably take months, but we're going to come all the way back up, and you'll make all kinds of money with it if you can hold it, if you can follow the rules of trading. Craig, longer time frames seem easier to you. There's a natural reason for longer time frames being easier. There's not as much emotional noise in it. When the faster and faster you go on charts, the more noise there is in this, the more volatility, the more challenges there are out there to trade, for you to deal with. The longer term, and I got to tell you, longer term trades, I'm going to be putting together a course on longer term trading because we get this idea that going faster and faster and faster is the only way to make money. And yet at the same time, we became traders because we want freedom. How many of you guys feel freedom as a day trader sitting here staring at a chart? And not only that, staring at one candle wiggling around incessantly. There's no freedom in that. Freedom truly comes in the longer term trades. We built a portfolio, and RWO folks, if you guys will confirm this, we built a portfolio of longer term positions in just ETFs through a 2-hour class that we did. And that was after the capitulation of the market on the pandemic. We put that on, and by the beginning, when we started the bear market here, from the point of entry to when we started the bear market in 2022, that portfolio, without any changes, was up over 90%. We picked 10 ETFs, set allocations to them, and we made no adjustments and made better than 90%. So I'll agree with you. Longer term is easier, as long as you've got the discipline to hold on and manage it. Kaplan Dave, I do use the 3-8 trap for trading credit spreads. The only difference is I really incorporate heavily into it big support and resistance levels in the chart. So, for example, if we look at this daily chart here in the diamonds, if I were to draw that line all the way across the chart, that's a big resistance level in the chart. It's even bigger right there. It's massive right there. So if I see this market rally back to those resistance levels and show failure, okay, I'm going to use that information to my advantage. So if we hit those and start showing failure at those resistance levels, then I'm going to try and put on trades to take advantage of that massive resistance area in the chart so I can profit from it. And we do that all the time. The 3-8 trap will help you oftentimes identify those trades that could be setting up for those kind of opportunities because it's so quick and responsive. Okay. Let's see, just curious. Yeah. The question was, do we offer trial memberships? Yes, we do. If you go to the Hit and Run Candlesticks website, you can click on Right Way. Well, it'll be right there on the front page, really, where you can get a trial to Right Way options, and it's it's open to the public. I mean, not open to the public. It is completely open for the trial. You have access to everything. We don't limit anything. You have access to everything. We have this really cool trading room that when I post an alert, if you have a smartphone and have linked your smartphone to the room, you can be anywhere and the trade alert pops up on your phone. If you use Apple products, and I have an Apple phone and an Apple Watch, I even get the alert on my watch. You can log into the room from your phone. I know people that are driving, commuting back and forth while they're on their phone listening to us in the Right Way options room. So, yeah, so you can grab that trial. You get all of the alerts. You get everything. So. Let's see. TMF, your treasury three times. Mr. Wall Street, yeah, I don't have I mean, if you're comfortable with these triple leveraged things, then by all means, I mean, I almost never trade them. Almost never. And the reason is because if you're honest with yourself, you really don't know the position you hold. These are meant for really quick in and out trading. and they are not meant for buying anything and holding it very long. And it's fine if you use them for what they were intended to do, but you have to be honest with yourself. You really don't know what you hold. You could be holding a mix of dollar futures and options and trade. You don't know what you hold. You hope the management has it down, but the volatility of these can eat your lunch big time. Sorry, guys, I'm way behind on the chat here. Um, KRC rules for covered calls. When I'm in a trade, let's say I've got a stock that is trending. Okay, and that stock is moving up and pulling back. I'm really missing my tools, my drawing tools. Pulling back, and I see a buy signal that gets created right here. Okay, an entry signal, and this is what I call a pullback opportunity in a trend. That's my entry signal for the stock. I want to buy the stock or I want to buy the option position, and I want to let that stock move. One of the problems, one of the mistakes a lot of people make in covered call trading is they put the short strike on too soon. They're so averse to risk, or they're not understanding the trade well enough, that they put the short on about the same time they put the long position on. That's a pretty bad mistake to be making. What you want to do is you want to wait for that stock to extend itself to the upside. Let it move to the upside. For example, if this area right here is the most opportune time for buying, it's the worst possible time for selling a covered call. Okay, and that's a mistake that a lot of people make here. Doing it too soon. So let that stock extend up and then look to sell an out of the money option above that current price. Because, see, the normal price pattern of the market is just what we're showing here, right? It's the peak and valley pattern. That's the most common price pattern in the market. So it's when we're starting to reach that upside move, we've been up multiple days in a row, and we stretch out there, then we sell this out of the money call up here. And that out of the money call should be somewhere around 30 deltas out of the money. And I'm always trying to sell those covered calls with around 30 days to expiration. And the reason I go, it's somewhere between 45 and 30 days is where I like to put them on, because it takes us multiple days to rally. It takes even longer normally for the consolidation or the pullback to occur. So I can take advantage of that price movement back, collect a nice premium here before that next buy opportunity shows itself. Because once that next buy opportunity shows itself, I want to close that covered call position up here and continue to ride the stock or add to the stock or something along those lines. But always trading the front month covered calls that are out of the money, somewhere around 30 delta. But the key is you got to let the price move. You let the price move. And then the other thing that is a rule for me, because this happens once in a while, that trade doesn't rest or pull back. It just keeps shooting to the upside. Once I've sold a covered call, I don't buy it back for a loss. Period. Remember, I bought this thing down here. If somebody wants to pay me to buy the stock that high, I'm going to let them pay me to do it. So I'll let it get called away. I will not buy back a covered call at a loss. Okay. So, and because I'll just let them call me away, then wait for the pullback and I'll buy the stock again. I'm not going to, they've paid me a premium to buy the stock at a higher price. My goal in trading, right, is to buy low, sell high. If they want to pay me a premium to buy the stock at a higher price and the stock stretches clear up there, by golly, I'm going to let them have it. They can have it and I'll make that extra money doing that. Okay. So I don't know if that makes any sense to you, but I teach this stuff all the time and in the room, and we go over all of these things multiple times with different strategies so that people can understand the setups, the things that I use to enhance trades, lay off risk in trades, and hedge them out. So, um, and by the way, I trade some long-term positions, and um, I honestly don't have the risk tolerance to hold things long-term, guys, unless I can manage them with options. If I can lay off the risk in options, then I can easily handle the risk. So utilizing option strategies to manage that risk, I can hold trades sometimes a long time. I think one of my longest ever was this trade in BDX. Let's see, where's my drawings on it? Right there. There was my entry on that little pink arrow on BDX, and my close was up here. You'll notice this was a weekly chart. This is 2013, and I was out in 2019. And look at how easy that trend was to manage. These are the kind of trades, guys, that'll change your life. And why everybody's rushing around to try and squeak out 25 cents on these day trades and stuff, I've got trades that are doing this. And by the way, this is not unusual. I think this was the longest one, but it's not unusual. There was a Disney trade over here. 4 years. 4 years. Beautiful trend. Easy to trade, easy to hold. Just make money every single day. Now, I'm not saying you should do, that's all you do is just some long-term holds, but I'm telling you, you're missing out if you don't do some. So much money can be made by holding longer term patterns. Okay. Um, any other questions I can help you guys with? I've got about 10 more minutes here, and then I need to break away. Um, what I the reason I need to break away is um, I do individual coaching with people in the afternoons, and so I've got to do some individual coaching sessions scheduled coming up. In fact, I've got a busy week because I'm actually heading out on a little vacation here at the end of the week. So um, um, just got a busy week out there. So Here, by the way, I'm going to give you, I wish I could share other screens in here, but here's that link to hit and run candlesticks. If you look right on the front page, there's a link to set up a trial for right way options. So, but anyway, I will do this coaching this afternoon, and then I'm always back in the trading room for about the last 30 minutes of the day to kind of wrap up for the day. And we talk about earnings reports that are happening, the next things on the economic calendar that are happening, things like that to kind of prepare for the next day and the wrap up. Jim, what I do TLT options or stock? What I've got right now in TLT is stock. But I would, once I build my full position in stock that I want, I would consider adding options. Okay. Now, so for example, if I get my full position in here, where I'm going to start backing up the truck and is if we can break this downtrend in here or this consolidation and pull back and hold. Okay. And by the way, trend is out here, so this may take some time. Okay. It's out here someplace. There's no rush here. When or if that occurs and I get my full position on, if I get additional upside patterns that occur, then I'll just add calls at the buy points. I'll buy some calls at the buy points because I'll certainly be selling covered calls as we rally. So I'll just enhance the trade with other options. And you know, that's something that I think a lot of people miss out on with options. We're only in it we're just trying to find the trade that's going to hit us right now and immediate gratification in a trade. But if you follow a trending chart, you can just repeat the same trades over and over and over. You know, for those upside moves and just keep doing it. Take a look at a chart like Cody. How many long trades are in here? Instead of just thinking about just one quick in and out trade, put this chart on a list and then wait for the next entry. And just keep trading the trend as long as the trend continues. If you buy a small position, either stock or a longer term options position, and then just continue to enhance it every time it sets up another new buy opportunity and take advantage of that trend that's already there. And one of the things this is important, why I think this is important, guys, is a chart like this for all this period of time showed that institutions were pushing this stock up. Institutions were supporting this stock. It's the only way it can do this. And as long as they're willing to continue to do that, I want to participate in that stock. Sometimes the best trades you'll ever find are trades that you've already had. You're just continuing the trend to the upside instead of just that, you know, I jumped in, I got 2-day move and I'm out. Follow the trend. A lot more money to be made there, and it's easier. Now, if I were to just do a TLT trade that was option only, I want to give myself enough time. So, Jim, I like your January 2024, that leap option in there. It would be the 2024s, 2025s that I would be picking up in here. So I can give myself enough time for this to rally. You know, obviously this will be the next big resistance point up here. But what I like to look at is the reversion to the mean. I never want to think that we're going to move, that I know enough that we're going to move all the way back up here. But I'll bet you anything, It won't be that hard to recover half of this sell off. And if I can get at least that, I've made a lot of money. And then I can decide if I want to hold past that. If it does show me that chance that it's going to break out and continue on, then that's how you turn these into trades that can just go for a long time and just keep bringing in the money. Very worthwhile. No kidding, CV. But I'll tell you, CV, that I don't know if you trade options, but you can alleviate a lot of that pressure with options. A lot of it. You got to remember that's what the institutions do. They manage the big, massive risks that they're carrying in these stocks with option trades. Um, and if you understand covered calls and uh, let's say you don't even have a full 100 share position and you can't do covered calls, credit spreads work great. Knowing when to add to the trade, adding more shares on, adding more contracts on, taking contracts off, building those profits so you can buy more stock on the next entry signal. I've done that a lot where my covered call profits and my enhancements of upside moves or downside moves in a chart, I've made enough money that I can buy more shares. Absolutely trade around your um, leap options. Um, I do that a lot when I'm holding leaps. They're always hedged. I'm always working to bring more money to the trade. And to think about this, CV, one of your goals should be initially, on a leap, you've obviously got theta decay happening all the time, right? Is every month work to cover or best your theta decay? That's what I try to do. I want to, any of my time decay in that long-term option, I want to utilize that um, in my favor and bring in more profit or income, what you're saying, into the trade. And it works beautifully to bring that income in that way and to enhance the profit of the overall position. So I trade around leap options all the time. By the way, for those who don't know, a leap option can be utilized just virtually the same as a stock. Um, you can sell covered calls against a leap, even in a qualified account. You can sell covered calls against a leap option. Think of it this way: um, you own an asset. That asset has value. Okay. As long as you own that asset, you can rent that asset and bring in more money, just like a rental house or anything else. You can rent that asset to bring in more money on your trade. Good way of handling things. So, well, hey guys, I have been going here for 2.5 hours. I hope you guys got something out of this today. I hope you learned something about right way options. Thanks for all of the RWO folks that came over. I do appreciate it. Um, thank you so much for putting up with the room problem that we had here this morning. So took some lemonade or took some lemons and made some lemonade, I guess is what I meant to say. And we'd love to have you come over and check us out. Right way options, become part of the team over there. If you have found something here of interest. If not, hey, I want to wish you guys all a fantastic day, a great afternoon. I would suggest be careful. As you can see, we've got sellers coming back on here. We rallied up strongly, and we've got sellers coming back in. So this is a 15-minute chart on the diamonds. Be really careful. These are going to be likely some big price moves this week. So you'll want to just be really careful and cautious about your positions. I would suggest not over trading it while we're still trying to figure this stuff out, because we could close the day in one direction, and as you guys know, we could completely reverse by tomorrow morning. If we, maybe we're rallying into the close and then completely reverse because we hear about more banks failing, or vice versa. We're failing into the close because of more bank failures, and then we hear that the Fed has backstopped everything and all is cool now, and the money's flowing like crazy again. So just remember, and then we've got all of that economic data coming up this week. CPI tomorrow. You've got to imagine CPI is putting a lot of stress on this market right now. If we get a compounding effect of banks failing and our consumer prices are continuing to stay hot, wow. That's going to be a unique situation to trade through. So just make sure you're not over trading. So I want to wish you guys all a fantastic afternoon. Thanks so much for being here. And I will hopefully see you guys back over in the room later on today. I understand we're still having some trouble with the servers out there. So hopefully we'll be up and running this afternoon for the close. Everyone take care. Wish you all the best. Great success in your trading. Take care, everyone.